All right. Good Sunday evening, peoples. This is Bruce with Targeted Wealth Creation. I had promised some metals and miners update. So that's what I'm going to do now. I'm saving uranium for a second video because this one's a little long in the tooth with charts. I'm not going to ramble too much. I'm going to get to the point on this one. I know some of you love it. I love to do it sometimes, but I'm going to stay and get this one done because there's a lot of charts for you to see and you can replay this at your own pace. So before I do the charts, I wanted to just say, hey, miners have woken up and are starting to perform. In bull markets, and I've been through three of them, almost four of them, but I wasn't very savvy in the very first one. Um, the bull market, so gold always moves first. We've seen that, and then it continues. Everybody says silver is going to run, silver is going to run, and it will. But my guess is we don't see 50 plus for a year, maybe a year and a half. I mean, it could surprise me. It could happen in 3 months, but I mean, getting up to 75 and getting to inflation adjusted. Remember, we went to, because of the Hunt brothers, we went to $50 in 1980, late 79 into January of 80. And then we came back in 2011 and went to like 49, high 49s. And think about inflation adjusted 2011, I think it was April, till now, it's about $125. Will we go to $125 in silver? Very possibly. Silver is used industrially, unlike gold. Gold doesn't have too much. I mean, you see it in fillings, you see it in a little bit of electrical things, but it's very expensive for that. And it's nowhere near the electrical resistor, you know, use that silver is. So silver is used industrially in so many things. For instance, solar panels, medical, um, bombs, right? I mean, it's in munitions. It's used in a lot of things. Cell phones, electric cars. I mentioned solar panels. So we have a deficit 3 years running in silver. If it wasn't for some of the banksters manipulating paper silver, then you would already have it broke out. I mean, the government doesn't really want it to run because it shows you how bad the dollar is doing. But all fiat currencies go down. All right. So this is an interesting thing that you're looking at on the screen. I pulled this up. I always like to stay ahead of the game. I sort of have my own database, but I thought I'd just pull. So you can go out and Google this and say top performing percentage gain ETFs year to date. Look, and I just wanted to show you. So how many do I have? Three, let's see, 3, 6, 9, 12, 13, 14, 15. It looks like 17. And look where I indicated with the green over here that they have to do with metals and miners. So the top performing fund, and I've played this a few times and mentioned it in some of my videos, but again, guys, all the 2x and especially the 3x, I move into them and move out of them because of the decay and all that swap and leverage they use to maintain the leverage. So all you have to do is go in and Google on any given day. So what is GDXU? It's 3 times GDX. So if you don't believe it, just go in and Google GDX and see what you get, right? Um, I could do it, but I'm not going to. I want to keep this thing flowing. So let's say it's up 5%. Then you can expect JNUG because it's 2x GDX essentially. I'm sorry, not JNUG, Nugget, the gold miners, the medium to large gold miners. There is the juniors, it's a 2x. But the point is, if you Google GDX and it's up 5%, you can generally expect Nugget to be up 10, and then GDX to be up 5, right? It could be a hair difference, but 5, 10, and 15. So when I get a sense from stochastics, from some of the people I'd have subscribed to, from my own technical analysis of the chart, I jump in and go into GDXU. I may get some nugget, and then sometimes I write options on those guys, right? So there's so here's a year-to-date return. This is the top ETF. Now, not just a little while ago, I showed you guys a week or two ago that Palantir, this PTIR and PLTU, Granite and Direction's 2X on Palantir were the top performers, and they were like just over 100%. I think PTIR was like 100% or 101%, and this one was like 98. Well, they've fallen back a little, and look at what has surged, right? It's amazing. And I've been saying this, guys, we're only in the second, maybe third inning in the gold bull run. So gold's going to go a lot higher than 3,300. It's been 35, but it's probably somewhere in the 7,000 to 10,000. I mean, I see forecasts out there for 20, and you probably don't want to live in the world where we have $20,000 gold. You may not want to live in the world that we have $1 million Bitcoin either, because if they're, quote, stores of wealth, that's a sad state. My sense is that in the 70s decade, I wasn't playing gold, but I was cognizant of it. I remember my boss, I worked for computer sciences, and I had an older woman that was my boss. I say older, now it would be younger than my current age. But certainly, double my age or more. And she was collecting silver because it was 79 and silver was the rage. People were going in and taking their silverware sets from their parents or handed down. I think in her case, it was from her grandmother, and they were cashing them in because silver was flying, right? It's almost $50. The Hunt brothers were trying to corner the market. I mean, it went from like, a couple dollars to $50 in that decade. It's amazing. And most of it was all in the last 3, 4 months, and that's what silver does. So anyway, going through, there's a lot here. I'm not going to go through everyone. And by the way, there's some other stuff. You got Palantir. Look at Uber, the 2X. Now, again, be careful with these guys. I'm not telling you to go out there and buy them. And anybody who thinks they should just go buy GDXU and set on it, because guys, guess what? When it goes up, it goes 3X. When it goes down, it goes 3X down. So get it, run with it for a while, and cash out. Don't be afraid to cash out on some profits. And it doesn't matter if you cash out and it goes up another 20%. Just watch what you're doing on that. Mexico. Um, I like the Chinese stocks, Babo or in Yeomax, but I like Alibaba, because the Chinese stocks have been beaten down, and their earnings ratio, their PE ratios are so much cheaper than the US, and they got a massive population. What is Baba, the Amazon of China? I know JD.com. I know a lot of the Chinese because I live in Asia the last number of years, off and on, but predominantly, so I have a lot more exposure. I order over here. Once in a while, I'll send something to Asia from Amazon, but mostly I'm going through a company called Lazada, and then they source a lot out of China. And they service Thailand, Indonesia, Philippines, a lot of Southeast Asia. They're a decent company. Nobody meets the customer service of Amazon, in my opinion. Look at this. Now, these are physical metals. This is a 3X on physical gold. To me, gold's going to go a lot higher, but short term, I think 4,000 maybe in the next 6 to 8 months. So I wouldn't be as well. 3Xer will help you, right? But I would be getting the miners. I think it shifts to the miners. So anyway, you see Europe in here, Netflix, but again, leveraged. So guys, I just thought you would enjoy that, right? I'm going to scroll so you can see Sprott gold miners, physical gold, a 2x, another ProShares Ultra Gold. Not bad. Now, not income, guys. If they happen to pay you a few pennies, like if you go out and buy GDX, it pays you, 1.5%, right? Some of the gold miners pay 2% or 2.5%. So they're not bad. And if you buy that and hold it for 5 years, it may end up paying you 10% because they keep raising it because they're literally cash cows. All right, let's get into the charts. I've done this a lot. Some of these I'm reusing. Most of them are updated because I need to. So gold versus the Dow, I could easily have the SPX. And I mentioned before, when you look at decades, I've already said starting really last year and this year and probably 5 to 7 more years, you will see commodities, certainly led by gold, outperforming the SPY, the Dow, the NASDAQ. Now, you may have some individuals. I'm bullish as hell on Palantir. I hope like crazy the market and the NASDAQ doesn't go down 30 or 40% because it will drag for a while Palantir down until they just keep blowing out earnings and keep on increasing and getting better and people can't not buy it. But look at this. We're already seeing this breakout. So this is about a predefined curve. And this is what happens. I say to people, you can't buy it and forget it. Look at people in crypto. You saw some of my videos on how to retire with Pulte, how to retire with Misty. But guys, in those, I don't know what you call the bull market, but I know in BTC you call it a winter, right? When BTC goes into the winter, which means the downturn. So where is it going to go now? Is it going to go 125, 150, 160? Where's it going to go in this since we were recently testing now, or does it drop back down a little bit and then move up? But the point is, once it surges again, then it's going to turn around. Just like when it went to 108 and set a new high a while back, it almost got back to 73, 74, the breakout. I think it got to 79. And that's what these things do. There's a line here. We may come back. I mean, if I see gold come back to 20, I got some individual gold charts. But if I see gold come back to this 2,800, I would consider one of the 3x physical gold just to play that for a bounce. Right now we're at 33 something and we may go up and test 35. I'm undecided. I think June, if the markets sell off, they could take gold down. But otherwise, I'm generally pretty bullish. All right, let's look at another chart. Here we go with gold. Let me blow this up and then I'll take it back. Whoops, why did that one not go in front of it? That's bizarre. I guess it's how Excel works. I'll just move this down and then I'll fix it. All right, because I'll expand them and then shrink them. So gold 2000 to present. You hear me at times when I show you charts, even when I'm doing Pulte and Coney. This is a classic. Some people call it an inverted head and shoulders. Most of the time they call it a cup with a handle. And there you have it, right? The longer and bigger, the more time involved in the cup and then in the handle, you get a long enough cup, you're not going to have a little, week or two handle. When it breaks, this is only the beginning. You probably have a 5-wave impulse move up, 3 waves up, 2 waves down. So, it's hard to count this. Is this a 1, 2, and we're still, and then 3 is going to have 5 waves up, or sorry, 3 waves up and 2 counter waves in a 5. So 3 is probably going to take us way the hell up there. But it doesn't mean we won't have strong pullbacks. Right now, the question is, do we break on out of this or do we just come back up and test this? because this is such a lengthy chart that you're not seeing the daily detail, right? Do we come up here and play for a while and then retrace? Do we get that 2,800 pullback only to see us then go on to 4,000? Probably, guys, or 4,500. All right, let me take that one back down. It's always strange to. I love Excel, though. You can tell I love spreadsheets because it's so easy to display my data that I just pull my charts in here. All right. I know guys love to just go take you to some website and show you and do all of that, but that I like my style. You know, we like what we like. All right. 2020 to present, so a little bit more zoomed in, guys. And these are the support levels. That's why I say 2,800. But I'm not sure we're going to go there. It all depends. 31 was support, and probably 30, 3,000. So my gut says we don't go anywhere below 3,000. It's just my gut if we even do that. Again, it just depends on how tariff, how other news, how bearish things. Some things are bullish for gold, some things are bearish and you get taken down, right? With everything in the markets. It really depends. All right. I'm not going to belabor this because you guys can watch the video and look at the chart and see what it. So you may want to buy on pullbacks, but if you don't own any, you can nibble on any down day. That's always my advice to people. People say, "Oh, I want to get some Pulte, but it seems so high." Well, guys, it was high in 70s, but when it paid $7, I bought more when it was almost 60. I bought it inside 60, I think 60.90 or something. You know, it went down to 61.38 just based on the NAV being taken out in the open. I think in the pre-market, I got it just under 61. But the idea is I'm going to buy more. Does that absolutely mean it's not going to go below 60 again? Of course not, right? It could, may not, depends on the markets and depends on Palantir. All right, guys. So a lot of charts, a lot of data. Let me just keep going. Now, this is GDX. You'll see some stuff that I did that these are new, but some of the ones I'm going to post here I've done before. So they're saying buy zone is 36.38. I don't think we get there again on GDX, guys. These are the senior gold miners. Now, ask me where I think it's going. Where do I think GDX is going, say in a couple of years? 160. We got to just get back to where it was in 2011. See, now think about this. How do gold miners make money? They dig it out of the ground, they got labor costs, and they got energy costs. That's primarily it. Yeah, a little G&A and some management and a little marketing, but not a lot. Their big costs, their embedded costs, okay, are the energy, which is oil based, right? Diesel, etc., for all that heavy equipment. And then you got the people to man the equipment. So that's where their costs are. So you see a term in gold miners called AISC, all in sustaining cost. And you always want to look at miners like your top guys, your Nico, your Newmonts, Barrick a little less so. But a lot of those guys, Wheaton Precious Metals, although, Franco Nevada, some of those are streamers. They bought the rights or they sold the rights to mines to other people. But my point being on these companies, you had a first quarter of gold prices. And then you had a second quarter. We're in the second quarter of gold prices, right? With a month to go. Well, that first quarter, we got up into, did we hit 30, 35? No, I think that didn't happen until the second quarter. But we were 33 in that first quarter. And you compare it to the fourth quarter, we're probably only 28. I mean, I'm not looking exactly at the chart, but I want you guys to understand how much more these miners make. So we start talking about free cash flow as them printing money. It's like NVIDIA comes out with a Blackwell, or they come out with a new GPU industrially, and they're selling to data centers. And, they had a lot of development costs, but it's still hardware. They got 90, 80, 70% margins when they can get those. Again, competition can suck that out, but they sometimes can sell all they can make, their backlog. And so when they come in and do that, they always use the term they're printing money, right? Well, don't think that miners can't print money. When that AISC is like $1,100, $1,300, $1,400, that's to make and produce and deliver their product to the market. Well, when gold's 2,500 and your ASIC is 1,300, that's $1,200 profit. What happens when gold goes to 3,500? Your costs don't really change, right? Gold's pretty low. So all of a sudden you doubled what you earn. If a company doubles their earnings quarter over quarter, and so they're playing catch up. If gold does nothing but stay in 2,900 to 3,400 for another quarter, these miners are going to make a lot more money than they made in the previous quarter. And so you have to think like that these things catch up. That's what drives earnings, and free cash flow is what drives. And then you start to get a run where people see it and move in, but people don't typically buy until they've already moved. Smart money, people like me now that have already been through the cycle a couple of times and played the game, I'm already loading up when they're inexpensive. I got one or two little juniors that in 1920, in 2020, they flew up during COVID. Gold was a lot, less expensive than it is now. And those miners retraced 60, 70%. I didn't sell them, still own them. Most of them now I have slight profits in. But I'd be crazy if I followed, oh God, just get out, right? 4 years I was underwater, a few months after I bought it, can't wait to break even and get out. If you have that mentality and you don't understand what you own, then you're a loser. Okay. You got to understand what you own, and you got to understand what sector it is in, how that sector moves, and where you are in the cycle of that sector. So that's what I'm trying to educate you guys on. That's the important part. And I'm not even really a gold bug. In essence, I'm a gold bug when the market and the gold market and the mining market tell me they're ready to move within the cycle. And then I know how to play the game. All right. So you got your seniors, and you can look at this all kinds of ways. You can look down here. I mean, so I'm just trying to give you a heads up on this. So let me, while I'm talking, and by the way, anybody who's on my channel, again, guys, I almost hate doing these. That's why you see me doing how to retire on Pulte. I mean, I love Pulte. Don't get me wrong. I love Palantir and PLTY, but that's why I do those videos, because those videos get 4,000, 5,000 views. You know what? My mining videos, now part of it is me getting the SEO right on my channel and getting people interested in miners looking at it. I got a small percentage of my audience that loves it, but I get 200, 600, 800 views. And I put a lot of effort and time in this. But I think you guys, if you'll just pay attention, tell a friend that this is what is happening and what will happen in the stock market going forward. It's just an inflationary cycle. It's a super cycle in commodities, not just metals and miners. It's foods, it's coffee, it's grain, it's so many things within the commodity basket. But I'm going to focus on energy. I'm going to focus on metals and miners, and I'm going to focus on uranium within the energy cycle. So I'll have a follow-up uranium. I was going to do it in here. It's just too many charts, too much stuff. So here's some big, wonderful companies to own. I would be willing to bet that every one of these companies are 3x or 4x in the next 5 years. That may not even sound good, because I can tell you some companies that I think are 20x and 10x. But guess what? Let Bruce tell you a little secret. There's a lot more risk with those guys, right? Because they got to do this and they got to do that and they got to get lucky on their drill results, and then they can be 20x, 30x, 50x. So there's a lot of risk. These guys, everyone on that board, is just about a no-brainer. If gold halfway does what, if gold goes to 5,000, every one of these, which I think is a layup, that could happen in 18 to 24 months. But I was saying these things over the next 3 or 4 years should almost average 100% a year. Anikio has been. I've been in it for 2 years, year and a half, and it's up 150% or something. Wheat and precious metals is probably one of the best. These two are some of the best run companies, and all mature, multi-jurisdictional, but safe jurisdictions. AEM. That's why Barrick with the symbol gold. I think they're maybe in the process of changing that symbol. Some of their stuff is in Africa and some other places where countries just decide to kick them out. And that's not a good position. You end up in a lawsuit for 7 years. You ultimately get some damages, but that hurts earnings. Franco, Nevada. Pan American Silver just bought one of my mid caps, MAG. All right. So I wasn't sure what I was going to do. I'm just going to let it flow into getting Pan American Silver shares. They should do very, very well. Even when it's something has silver in its name, it's probably producing 20% only, 30% of silver. The rest is other metals. All right. So then you've also got GDXJ, okay, which is just the 1X, right? You got GDX. And then if you want a 2X in GDX, you go to JNUG. If you want a 3X, you go to GDXU. Well, GDXJ is the 1X for the juniors, and the markets have cycles. If you want a 2X, you get JNUG, not NUGT, because that's a 2X, okay? And again, guys, don't hold these forever. I mean, and the 2Xers, yeah, I could see being in it for a couple of months, 3 months, but only when you're being rewarded, and then set stops in there. Because if you get, 150% in 6 months and you want to keep holding it, set a stop, right? Or just take a little off the table and set some stocks or sell it and try and buy back in cheaper, lower your cost average. All right, guys. So this is broken out. This is now resistance. I don't see it coming back down here, but could it retrace? Absolutely. So in silver itself, this is a log chart. And look at this. This. I mean, I don't see how we don't get to 50. But as I said, everybody thinks it's going to happen so soon because we've already been there twice, and it should be 125 to equal 50 from a price inflationary basis. But that doesn't mean it's going to happen. When silver moves, look out. And we need to get above 35.50. If we get above 35 or 35.50, it may launch. But it also, I have a feeling we may just go, we're looking like we're going to do that, but I think we might go up to 38, 38.50, and then just pull back. Pull back and maybe test 35 breakout and hang around for 3 to 5 months. I don't think we're going to see 50 till next year and maybe even late in the year. We'll see. Again, what I think doesn't really matter, but I listen to a lot of people, and so I try and pick the smartest and best people and see what they're saying and then match up what I think in my experience. And a lot of times it's easy to get a thought process going. So here's a zoomed in monthly view. Again, once above 35.5, I try and put these comments in sometimes so I don't have to type them out here. And sometimes I do the opposite. So here's weekly candles on silver. So this is taking us in a little closer. We're up in the high 33s. We've already had and look to have the highest monthly closing ever in silver. Now, listen, I told you twice silver's run to $50, but it didn't sustain that. I mean, it literally crashes when it runs that extreme because silver, I was playing silver in 2007 and 2008. And 2007, I think at one point silver was $4 to $6. Well, in 2008, silver got to 20, 21, and it looked like it was running. And I doubled and tripled my futures on silver. And I got a big loss. I had to buy back. I dropped about 20%, but I had run so far up in my futures commodity account that it was a drop in the bucket, but I just got too a little bit too aggressive. Well, when 2008 came and the housing crash, right? The mortgage and housing crash in the fall hit, gold got up to 1,000 during the year. Gold pulled back to 700, so it went down 30%. A lot of the miners went down 70%. Silver literally crashed. I believe that $4 came into play where I had seen 20. All of a sudden it was 4. And then get the beginning of 2009 and you go to April of 2011 and it hit 50. So when something gets that stretched, guys, it's like a rubber band. It's gonna just collapse. It's gonna break. And that's exactly what happened. So we could have that again. If and when it ever goes to 100 or triple digits or 125, and it's a run where it's been 50, 60, and it's hanging around, and all of a sudden there's a 2.5 month run, and you go to 125, and everybody says it's going to 250 or 500. That's when you can count on it coming back and testing 60, 70 again and do just the opposite. It's just silver is, you talk about, it's a poor man's gold. A lot more people can afford it because it's 1/100th of, I won't even get into the ratio and all that. All right, guys, so I'm going to move through. I need to finish this. All right, here's a silver daily chart, and I give you stuff. You guys can read this. Take your time. I'm not gonna, you know, replay the video. Stop it. Here's more. We got a wedge. This is a bull wedge. Okay. 80% of the time it breaks out to the positive based on the formation. And a lot of times, I got some other charts to show you. I'll probably tonight, because it's my morning over here on Monday already. I'm going to do another one. Rambus Chartology is a really brilliant guy. I've had subscriptions to him, but I couldn't show you even when I'm under subscription, which I'm not. But he does a freebie every once in a while. So I got his freebie and it's not out on his website. He posted it somewhere and he analyzes the chart. I love his technical analysis. It's not quite as colorful as all these from TradingView, but nonetheless, it's brilliant work. And I'll show you that stuff as well. Um, Here's some more of silver miners breaking out, and then I need to push through this. This is SIL, the global X silver miners, right? The longer consolidation, the greater the size of the breakout. So this last, wedge formation took about a year and 3 months, excuse me, people, to form. Let me drink a little water. All right, that should help. So when these things break, again, guys, these are probability patterns, right? So it's already setting above the line. This is just saying one of the paths I drew. I could have just drawn it, stayed at the line and pulled up, come back. But maybe it goes back in like, oh, it was a false breakout. And it just wants a little more time because sooner or later it's forced to go one way or the other. But the bottom line is, it appears that the miners are moving, which is my point from the very beginning. The metals are at a price that the miners, when you think about silver, I told you it had, let's just take the two, we don't care about 1980. But in 2011, it ran up to 50. Well, the miners, GDX, silver miners, everything was way up there. Gold was at 19, 20, something like that. Silver was in the mid to high 49s. and your GDX was like 64, I think, 80. Maybe it hit 70. I have to look at that chart. But here we are at 3,300 gold. We've been 3,500 gold, and we're 30 silver, and we aren't, we're at 44, 45 on GDX. So explain that to me. These companies are going to make a lot more money. So these are undervalued. You're buying something, it's the old saying is you don't want to skate to where the puck is, you want to skate to where the puck is going. Well, you want to buy these knowing where they're going to, high metals prices rises all boats. Okay, here's platinum. Now, I talked about in a couple of my videos, I responded in some of my comments, even on other things. Platinum broke out this week, and you see it here a little bit, right? It went well over this. It could pull back to test around the 1,000 level, but I was already in SBSW, already massively in PLG. And as soon as I saw that first head stick up, I bought some ANGPY. This is an over the counter, but it trades enough volume. It doesn't have a liquidity issue. And you also could buy Sprott Physical Platinum and Palladium Trust. So the white metals, as they're referred to, are breaking out, have broken out. I cashed out of my new buys. I cashed out of additional shares of SBSW, ANGPY, and PLG. I still hold a significant amount of these because it's only the beginning of where it's going. But when I got 20, 22, 23% in like 4 days, I just said, I'm going to take some cash off the table because I had been buying more in my dividend, my yield maxes, and some Roundhill PLTW there additionally. So these things, when they take this long to form and they break out, and if they're going to retrace finish, these things are going to move. I mean, platinum was $2,300 at one point. Let's see if I have one of those. In 2009, I think, when gold was moving to 1900, it almost is all, it's rarer than gold. It almost always is priced. Well, gold's at 3,300 and platinum is now at what? 1105. It was down here at 1,000. So you saw it break out and then it just continued. Now, it could go up a little bit more. It could come back and retrace halfway and do that game, or it could literally consolidate, have a sell off day. I don't think it goes back to the wedge. So that's why this is an old chart that I had this in there and then I updated the price. So, guys, this is probably a pipe dream. At best, my God, again, could I be wrong? Of course, a one time I say it, but all the probabilities say you'll be lucky if it goes back to 1,000. All right, we're almost done here. How about the platinum gold ratio, right? I said, what was that ratio when it flew up here? Like over 2 to 1. What are we at? Like point, I'd have to drag this even bigger. Point 17? Under under point 0.3. So that gives you an idea. It would have to go up 17 times or 7 times. Have to go up 7 times to get maybe 8 to get to where it was. Well, what if it doesn't and it only goes up here to 1.4 to gold? Or gold is still 1.4. Well, that means it's 1,500, 1,800. Do you know what those miners are due, or even the physical trust if you buy it? There may be even a leverage play. I didn't notice one right away, but I suspect there is. All right, guys, that's what I got. I need to go. I got a few things I got to do. Um, Hopefully, this resonates with you. You want to be on board. I get it. I think the high yields are great. Everybody loves to get paid. But if you want some growth and you want some fabulous growth, you want to be in some of this stuff. Okay. And like I said, some of them pay, my, whatchamacallit, AEM. It's not a big dividend, but it's, a percent and a half. That's just a bonus. I got a stock going up 100% that's paying me. So what's my total return if it went up 100% last year and I got a 1.5% dividend yield? Then I got a 101.5. That's not bad. Okay, guys, this is Bruce with Targeted Wealth Creation. I'll say adios, amigos. Have a great rest of your holiday weekend and look for more, guys. Thanks to all the new subscribers. Love, love, love that. Keep it coming, and I will keep the content coming. All right, I'm not a financial advisor. This is not financial advice. Bye for now.